here we go. I'm recording now. All right, so what we're just starting the exam review, and I'm going through what I was looking for in the essays, which was also on the practice exam. Thesis statement, evidence with numbers and percent, analysis to support your thesis. And then if there's more than 2 years where you have two separate growth rates, 2016 going to 2017, 2017 going to 2018, discussing the trend in the growth rates. So here's like a good example of that, and that was from somebody in this class. The Boeing company's net income, so they're identifying what they're talking about. They're telling me it's improved for the 3 years, 2016, 2018. So that thesis statement is like a 10-second elevator statement, okay? The rate of net income increased 68.02% in 2017 compared to 2016, an increase of 3,424. Okay. The rate of net income increased 23.67% in 2018 compared to 2017, an increase of 2,002. So they've got everything there. And then that last statement is saying the growth rate declined in 2018 compared to 2017, but the company is still showing strong improvement. Okay, so that's a really good example. Okay, so a couple of journal entries that were a little more challenging. I wanted to go over them with you. And rented out the hotel to a customer. The customer paid 1/3 in cash, the balance in 30 days. So give me a quick journal entry, or you can take yourself off mute. What is the answer to this question? What are the accounts involved in this question? So put it in the chat real quick. Rented out the hotel to a customer. The customer paid 1/3 in cash, the balance in 30 days. Give me the accounts involved. And this is a company that owns a hotel.
Cash, revenue, and AP.
It won't be AP because it's the customer.
I'm sorry, AR.
AR, you got it. Yeah, so easy to get these mixed up. So we're going to say cash is debited. Accounts receivable is also going to be debited because they owe you money. And then we're going to credit service revenue, okay? And then it's just a question of cash is going to be 1/3, accounts receivable is going to be 2/3, and service revenue is going to be the whole amount, which is $30,000. So they rented the whole hotel. That's not just one room, okay? So what's 1/3 of 30,000? Oops, hello. What's 1/3 of 30,000? Should be 10. And I was really pleased that you guys were okay with just typing in your journal entries. It's kind of a pain to do it that way. So, all right. And yeah, Tara, you could do rent revenue there as well. Okay. So let's go to the next slide. So that was one. So I think for a lot of you, you didn't know what to, not a lot of you, some of you didn't know what to do because it's a 3-line journal entry. The 2-line journal entries are so much easier. So I wanted to go over a couple of those. All right. Purchased land for a restaurant, put 10% down and agreed to pay the balance in 6 months by signing a 6% note for $90,000, total $90,000. Okay, in the chat, real quick, what do you think goes in there? What accounts are involved? Purchase land for a restaurant, put 10% down, and I think I actually said in cash, and agreed to pay the balance in 6 months. So Jacob, land, cash. Oh, almost. So you got the first part. Land is debited, and we bought $90,000 worth of land. And what else? And Jacob says cash, and it's going to be 10% of that, so 9,000. And what's the other bit? What's the 80,000 going to go to? correct, Tara, notes payable. I'm just going to abbreviate that. 81,000. Let's do it right. Okay. All right. All right. And then another 3-line journal entry. A customer prepaid for the rental of the hotel for 2 days in September in cash. So I know we're using the language of prepaid, but it's the customer prepays. So what accounts are involved in this one? This is not a 3-line journal entry. Sorry, guys. 2-line journal entry. So if a customer prepays something, what accounts involved? Jacob, yes. Which one's debited? Which one's credited? Which one's debited? Let me give you that one. Oh, Tara, you got it. Okay. Cash. Oh, I didn't give you any dollar amounts. How much should we pay for the hotel? 35,000. Cash, 35,000. Okay. All right. And then the last one. In an earlier transaction, the company purchased land for $90,000 for a golf course, put 10% down and agreed to pay the balance in 6 months by signing a 6% 1-year note. Okay. Now the company must accrue the interest owed on the note for 1 month. So what they borrowed, they had a note payable. This is not a journal entry. I'm just noting it here of $81,000. Okay. So we'd say 6% of that. And how do I do that? 81,000 times 6% is going to be 4860. And it's for 1 month. And so it's going to be $405. That's the calculation. All right. So now what's the journal entry? So if you had gotten, so there's 3 things here that are involved. And you have accrued things before. If you've gotten a utility bill or a telephone bill and you say, oh, I owe this money, but I haven't paid it yet. For a telephone bill, you've debited telephone expense and credited accounts payable. Okay. In this case, it's for interest. So it would be interest expense. And let's just abbreviate that like that. And it would be interest payable. Now, if you had gotten the dollar amount and one other item here correct, I would have given you the full 2 points. If you'd gotten both of these correct, but the wrong dollar amount, I would have given you the full 2 points. If you'd used accounts payable instead of interest payable, I would have given you those points because it is a stretch question, okay? But you had enough information to do that accrual and get at least interest expense and at least accounts payable there. So that's why I wanted that there. Any questions so far about the journal entries? All right. So give me a call tomorrow and I can give you your individual scores, or give me a call Thursday, or not a call, just go into my Zoom room and don't worry about making an appointment, just come and that'll be good. Okay, I'm gonna stop that video